Consumer confidence is in free fall, absolutely plummeting. What's that mean for the stock market? Will it follow? Got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Consumer confidence has been plummeting, and recent data from April shows that both consumer confidence, consumer sentiment, essentially the same thing. Two different research teams doing the analysis there, but they're asking consumers, hey, where do you think you will be 12 months from now? Where do you think you'll be financially a little bit out there in the future, better or worse than today? And if there's any theme to what's going on in the economy and really the stock market thus far in 2025, it'd be uncertainty. Lack of clarity with policy and tariffs, and just great uncertainty about, well, what lies ahead. And sure, of course, that uncertainty is going to, yes, confuse Wall Street and create some jitters, but also be hard to kind of have a great and confident vision of the future for each of us as consumers. And so yeah, I get it. Numbers for consumer confidence are down, lowest level in a few years, and actually at troughs, at low points, consistent to other pretty challenging times in the economy. So the question then is the stock market going to follow? Right? We obviously have had some pullback in the stock market this year, but with the magnitude of the decline of consumer sentiment, consumer confidence, are we going to see the stock market plummet even further based on this negative outlook? Thankfully, this hasn't been the trend in the past. Historically, when consumer confidence goes down, that doesn't mean that the stock market is destined to follow. In fact, we'll look at the chart here in just a second. It typically means the opposite. So we don't know what lies ahead here, but history is glaringly, wildly clear in this, that consumer sentiment is typically not connected with a further decline in stocks. Let's take a look. All right, so this is a messy chart here. Let me explain what's going on. This is showing consumer sentiment going back to 1971. So a whole lot of data. And the dotted line in the middle is just the average of consumer sentiment, which around 84.4. And so you'll see the gray line sort of tracking what consumer sentiment has been over that time based on those readings. And if you look to right now, this isn't showing the April numbers. The April numbers are a little bit worse even, but the March numbers at 57. So you can see that is very, very low and similar to some other areas that were troughs, okay? But take a look at what's written in the blue in the blue ink. That is the subsequent 12-month return from the stock market. And if you look, let's just go back. So February of 1975, the consumer sentiment was below 60. Over the next 12 months, the stock market performed 22%. A few years later, it was even lower. Consumer sentiment was even lower in May 1980. Over the next 12 months, stock market did 20%. October of 1990, consumer sentiment was just above 60. The next 12 months, the stock market did 29%. March of 03, right? That's like the bottom of the tech bubble. So everyone's feeling awful, obviously. The worst stock market since the Great Depression at that time. Over the next 12 months, the stock market did 32%. November of 08, another one to point out, obviously an awful time period. And by the way, it would get a lot worse from November of 08 until March of 09. It would get a lot worse in the stock market. And yet, the 12 months after November 08, the stock market had a positive return. And then even the most recent one, June of 2022. This is in 2022, the stock market was basically just grinding lower the entire year, all the way until October of 2022. Really from January till October, there were a lot of spikes. It was just sort of grinding lower, and consumer sentiment was very, very negative at that time. And yet the 12-month return, positive double digits. Now let's flip to the top. When consumer sentiment is very high, is very optimistic, when these surveys asking people, hey, how do you think you'll be 12 months from now financially, better off, worse off? When people are very optimistic, what actually are the stock market returns. Going back 1972, the next 12 months was negative in the stock market. In 1977, the next 12 months was basically flat. 1984, positive still. January of 2000, negative. January of 04, flat, basically. January of 07, negative. January of 15, negative. This is very, very interesting. Guys, history paints a very, very clear picture. We have no idea what's ahead, but at least historically, peaks in consumer confidence, peaks in consumer optimism don't necessarily say the stock market's going to be performing well over the next 12 months. Troughs, negative feelings, extreme negative feelings, typically suggest it too, that it will. This is a contrarian indicator, and therefore seeing the headlines like we've seen this year where consumer confidence is absolutely plummeting doesn't mean that the stock market's destined to follow. In fact, history would say that's a contrarian indicator, and you should be pretty optimistic about stocks moving forward. Summarized here in the upper left that in the 10 sentiment peaks over the next 12 months, the average return in the stock market was 3.9%. Not terrible, but well below average. In the 9 sentiment troughs, the next 12 months averaged 24%. So with the theme of uncertainty, I want to share with you again, I want to encourage you again to stay consistent and disciplined with your investment strategies. If you don't have a clear strategy where your investments, you know exactly where you're playing offense and exactly where you're playing defense, and you have confidence that, yeah, when things do turn around, and I've got the right offensive players, I've got the right strategies that will capture the upside of the markets. But also when there's volatility, when there's jitters, I know I have confidence in my defense. Many people are concerned about bonds and with interest rates and potentially stagflation. I get all of that. So make sure that you've got the right strategies. Work with your CFP. Those strategies need to be consistent with your financial plan, your time horizon, your risk tolerance. Investment planning is just one of the 6 areas of your financial life. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us here as well, or give us a call, 574-247-5898. All right, there you have it. Go on, take your next wise step in your financial life.